Ladies and gentlemen, what an absolute wild day it was in the markets today. But in today's video, we're going to talk about specifically what happened around 1:30 p.m. This leaked report that sent the market from rallying into a huge tumble. Because people, this new report, this new piece of information that we just got could change absolutely everything. So everyone, what caused the rally early on in trading, and then what caused the massive reversal? Well, that's exactly what I'm going to go over in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. So everyone, we can see the S&P 500 started off very strong, a rally to around 46.06, but then around 3 o'clock, it had a huge reversal and it tumbled all the way down to 45.29. So that is a big move, everyone, of around 1.6%. So again, what caused this? Well, everyone, it was this. So markets panic after planted story of BOJ, that's Bank of Japan, Japan's central bank, YCC, that's yield curve control tweak, sent stocks tumbling, yields and yen soaring. So I know that's a lot of market jargon right there, so let me break it down for you in very simple terms. There was a story that came out that the Central Bank of Japan, the BOJ, is going to stop or they're going to adjust their yield curve control measures. What is yield curve control? Well, for example, if the Federal Reserve says, look, we want interest rates at 1% no matter what they will do is say, for example, if the 10-year US Treasury yield has a yield of 1% and then people sell off bonds and the yield goes above 1%, well, then the Federal Reserve will come in there and buy whatever amount, whatever it takes to get the yield back under 1%. This is called controlling the yield or the interest rate on the bonds they want. But you may be thinking, well, what does the Bank of Japan have to do with the US? Well, it has something very, very big to do with the US, more important than any other central bank on the planet. Why is that? Well, that's because the Bank of Japan is the biggest holder of US Treasuries besides the Federal Reserve. Look at this chart. So everyone, we can see here major foreign holders of United States Treasury securities as of April 2023. And look at this. Japan just has, a little bit, 1.1 trillion, that is, of US Treasuries, followed by China, United Kingdom, all other, Belgium, Luxembourg, etc., etc. So, okay, again, you're probably wanting to know, well, what does that mean? Well, what that means is if the Bank of Japan stops doing yield curve control for their bonds, they're most likely going to stop buying US government bonds as well. And also the yen, the Japanese yen, that has been falling very, very quickly lately. They may want to start buying some yen to strengthen the yen. And in order to do that, they're going to need US dollars. Well, how will they do that? Well, it's very simple, everyone. They'll sell these US government bonds for US dollars, use those US dollars to go and buy the yen to strengthen the yen, which will weaken the dollar. Why is a weaker dollar bad? Well, that's because all commodities priced in US dollars will go up, and that could lead to another spike in inflation. But that's just the tip of the iceberg, everyone. Let's get deep into this report. So with stocks levitating merely one day after Powell effectively gave the green light to keep buying by assuring markets that the July goodbye was for all intentions and purposes the last rate hike, that means the Federal Reserve isn't going to lift interest rates anymore unless we get an inflation spike again. The market suddenly deflated like a Hindenburg balloon, encountering a spark just after 1 p.m. Eastern Time when the BOJ, Bank of Japan's favorite mouthpiece, the Nikkei, decided that at the perfectly obvious time, local time of 2 a.m., to blast a report claiming that the BOJ would discuss tweaking its infamous yield curve control, something it did back in December, to a catastrophic consequence. So again, everyone, what are those catastrophic consequences? That is yield spiking on US government bonds, like what we saw with the 10-year US Treasury. It spiked over 10%, and also the US dollar could go down even more if they sell some of these bonds and go ahead and buy more yen. And for those who don't understand the significance of the 10-year US Treasury yield going up, what they'll simply mean is all credit products like credit cards, car loans, personal loans, mortgage rates, they will all go up. Now, before we get deeper into this report, a quick word on today's video sponsor. Today, I have something incredibly exciting to share with you all. You all know how much I value online security, right? Well, get ready to meet the sponsor of today's video, Surfshark, your digital guardian. Surfshark VPN, the ultimate virtual private network, helps keep people like you and me safe and secure online. Because get this, with Surfshark, you can encrypt your data, keeping it safe from prying eyes. Now, let me tell you how Surfshark can be an absolute lifesaver for someone like me or you considering going overseas. Well, when I'm traveling, or say, for example, you're traveling to a country that has strict internet restrictions, well, no worries, because with Surfshark, I can virtually change my location, accessing all the content I love, just like I'm back home. And let me break it down for you. Surfshark isn't just about security, it's about freedom too, which I absolutely love. I can use Surfshark to unlock content libraries and streaming services from all around the world, say goodbye to geo restrictions. But that's not all. Surfshark's clean web feature keeps me safe from ads, trackers, malware, and phishing attempts while I'm surfing the web. Now here's something special for you, an exclusive offer I managed to get for my subscribers only. If you use my code Cowan, you will get an extra 3 months of Surfshark protection for free. So go ahead, click the link in the description, sign up with Surfshark, and start protecting yourself today. So we can see with this chart here, what the report did was spark a market-wide momentum reversal as amateur retail traders once again got spooked out by whoever planted the trail balloon and who just happened to be long the yen, and stop hunt as the first USD JPY, that's the US dollar, and Japan yen plunged below the key level of 141 and then 140. While fears that the Bank of Japan would spark another round of Japan government bond liquidations, that sent both Japan government bonds and US treasuries, remember, Japan is the largest foreign holder of treasuries, so dumping Japanese government bonds would suggest less demand for US paper as well, was crashing, with the US yield surging above 4%. And another great chart here, everyone, since everyone is watching the 4% level as a catalyst to sell long duration assets, you know, those stocks which are up 50 or 100% or more year to date, SPOOs promptly panicked and tumbled 70 points after the planted BOJ story. So everyone, this is now another catalyst we can add to the list for what we have to be concerned about if you're investing in the stock market. Right now we have bank failures still happening. We have the commercial real estate sector, which I'm watching very, very closely and I'm very, very worried about. But if the Bank of Japan starts selling US government bonds, remember they have over $1 trillion worth of these US government bonds, even if the Federal Reserve starts cutting interest rates, if they start dumping these bonds, it may have no effect on the bond market. Not to mention the US dollar is already tanking right now, so if they start selling US dollars and buying more yen, that's going to make the US dollar fall even more. That's going to make all commodities priced in the US dollar go up, and that's going to make all imports become much more expensive, which could risk another spike in inflation. But do you know what this is going to lead to, everyone? Well, this is going to lead to a perfect setup for gold. I think gold is being suppressed right now, and JP Morgan has just released a report that gold is going to go on a massive rally in 2024 because I think we're going to have lag effects from the Federal Reserve rate hikes. Remember, it takes about 6 to 12 months for these rate hikes to have their full effect, or for us to get the data on how much of an impact they are having on the economy. So even though I don't think we're going to have a recession this year, it is pretty likely, and most analysts believe we will have a recession in 2024. A lot of people will run into gold and silver as the safe haven. But on top of this, the biggest catalyst will be if the US dollar tanks, gold is going to soar. So everyone, look at this. JP Morgan sees gold charging to records in 2024 as Federal Reserve cuts rates. Now remember, JP Morgan has been caught manipulating the markets in the past, but let's go ahead and have a look at this report. We'll take everything they say with a grain of salt, but I'm actually more bullish than the information they're putting out here. So listen to this. Falling real yields in the US will be a significant driver for precious metals when the Federal Reserve starts to deploy rate cuts, which will play out in the second quarter of next year. Well, everyone, I think it could even be as early as Q1 2024. The gold has rallied around 15% over the past 12 months, as we can see on this chart here, supported by the signs the US rate hike cycle was nearing an end. Buying central banks, as well as bouts of haven demand in early May, it approaches record high of $2,075 an ounce set in 2020. So that's exactly right, everyone. We saw a lot of fears early in the year with a lot of banks going under. People were running into gold and silver. We also saw a lot of central banks there buying gold at record pace, and I think this demand is only going to continue with a lot of the geopolitical risk right now. The bank has an average price target of $2,175 an ounce for bullion in the final quarter of 2024, with risk skewed to the upside. So I think we could easily see $2,400 an ounce, everyone, by the end of 2024. A forecast for a mild US recession that's likely to hit sometime before the Federal Reserve starts easing. So this plays out perfect for my thesis that I think mid next year in 2024, the US will be in a recession. That's going to cause a flight to safety for gold and silver as well. And also on top of that, falling interest rates and a falling US dollar, a lot of people are going to run into gold. We're in a very prime place where we think gold ownership and long allocation of gold and silver is something that acts as both a late cycle diversifier and something that will perform as we look to the next sort of 12 to 18 months. That's exactly right, everyone. That's why I talk about in my course, link in the description below, why you want to diversify with gold, silver, and Bitcoin to hedge yourself against an economic downturn, but also a market melt up as well. They say gold and silver are quite agnostic to whether there's a soft landing or hard landing in the US. Although a more pronounced recession would result in a more dramatic cut in interest rates, he said, and that's in contrast to equities and cyclical commodities, such as aluminium and copper, where returns can vary considerably depending on the economic scenario. Now, money managers' net long positions in gold futures have increased this year, but the trade still isn't too crowded, he said. Other sources for physical demand has also come into effect, with central bank purchases becoming increasingly strong driver of prices. That's exactly what we've been talking about on the channel, everyone. There's an eagerness here to really buy in and diversify allocation away from currencies, because we all know every single fiat currency in history has failed, adding that geopolitical risks have made gold even more appealing to governments. And what have we seen now with BRICS, everyone? They're trying to make their own gold-backed currency. We'll see if that happens or not. But we are seeing a lot of central banks and a lot of countries, they know fiat currencies are going to fail very, very soon. That's why they're trying to create a central bank digital currency, because every 40 years, their fiat currency or their Ponzi money they create, it always fails 100% of the time. This has happened for hundreds of years. So everyone, I know we're thinking, well, okay, what does all this economic jargon and market jargon mean for you in simple terms? What this means is, everyone, why I'm bullish on the markets, why I still think a market melt-up is in play, we still do have a few risks. Like I talked about, commercial real estate is a risk, and now if Bank of Japan all of a sudden starts dumping bonds and we see yield spike on US government bonds, that is a big risk as well. But you know what the good thing is? I'm positioned either way. I've got my gold and silver to protect myself against an economic downturn, and I've got my Bitcoin as well in case we do have a market melt-up, which has been outperforming the market and will continue to outperform the market leading into the halving event in 2024. But everyone, what do you think about all of this? Let me know down below. Now, again, don't forget to check out today's video sponsor, Surfshark, by clicking the link in the description below and signing up today. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.